Hello, friends, and welcome to another session of technical analysis on natural gas markets. So, before we try and analyze the charts for the coming week, that is the week commencing 11th of March, let's take a step back and recap what did we discuss last week and how did the markets play out. So, if you remember from the last session, we basically talked about this accumulation phase. We talked about this green bullish channel. We did also speak about this double bottom here. We did say that this blue line here at the level of 1.78 is acting as a strong support. The only reason or the rationale behind was we see this double bottom, we see a breakout, retested, and we have seen the retested all time frames, and then the market's moving ahead here. So the breakout candle is strong, even the retest is looking good here. And then the markets were moving in the bearish channel. This is where we closed last Friday, and then when the markets opened this week, they gapped up here. They retested the green bullish channel, and then we seen the markets moving in the upward direction. Testing here, retesting the channel again, gone here. So if you remember, we did said that we're expecting the market to touch $2. That's what we saw in this spike here, and then eventually the markets not able to hold the bullish momentum, and then this just came down, falling on towards the end of the week. Now, one thing I want to show you here. So if you look at this level here, and it is very interesting. So I'm just gonna let me just put a trend line here, and then and then if you try to put there you go. So this is clearly a descending triangle formation, okay, so which is a bearish one. And if I maximize it, try to enlarge it, let's see, for making it more clear. So look at this. One can also say it is forming an head and shoulder here. So I would say left shoulder, head, and right shoulder, but this is a spike again, so probably not, arguably it's not the best head and shoulder. But look at this, the descending triangle. So clearly we can see a downward action from here, and then this is the neckline which was getting supported. Once it broke down this neckline, so look at this candle, strong candle. This is a confirmation. So always, in technical analysis, when you're trying to plan a trade, make sure once a neckline is broken, make sure there is a confirmation. And I'll come to this point later in the analysis when we look at this zone as well. So the neckline is broken, we see a confirmation, and then most of the traders will usually have the entries on the retest, saying that this is just a disclaimer. This is not a buy or a sell recommendation. We are just trying to study the charts, the analysis based on the charts. So broke down, confirmation, and look at the retest. It is a perfect retest. So most of the sellers might have entered here on this red candle here, and then once the even the retest is so strong here. Look at that wick, and then it's gone down here. So it's a perfect recipe for a bearish momentum right from the breakdown of this neckline. And then we can clearly see the markets going down, taking support at 1.78. Now one can argue that the markets have broken 1.78, but people who follow me, they know that for me it's still not broken. because if you look at and that's the reason I was saying, about the confirmation candle right here. So if you look at this red candle, so the market's trying to consolidate here. If you look at it, it made a bearish flag as well. So look at this one. So it was making a bearish flag here, roughly around this level, and then it broke down with strength. Look at the breakdown of the flag. It's a nice big red candle. But look at the very next candle, and that is why a confirmation is very important. Look at this very next candle, straight shot up back. This clearly says, the buyers are not letting the price fall here. So had it been another red candle instead of this green candle as a confirmation, then we could have, assumed that the sellers are, strong, the buyers are not interested to buy here. But based on this green candle, it clearly says that, even even though the sellers are strong here in this region, the buyers have entered here and tried to push back, and that's what we saw. Sellers broke down, buyers pushed it back up, and then eventually you can see the price going a bit higher. And based on this, broke down, back up, try to push it down, straight back up. So this is basically the rationale that 1.78 zone is still intact. And then we had a closing above 1.78, so which is still acting as a very good support for us. As long as 1.78 is holding, we have this bullish momentum. If it breaks 1.78, if markets break 1.78, then I think the bulls are going to be, weak here. And then the next support level, as we discussed, was 1.68 to 1.7 zone. So this is the next support level. Let me just put a horizontal line here, array maybe. So roughly this is the next support zone, which is strong here. So first support zone 1.78, if that breaks 1.68, if 1.68 breaks, I think bulls will probably struggle here, or I think then the bullish momentum is out of the window for this TA. So let's hope for the bulls that 1.78 holds, if not 1.68. As long as these zones are holding, I think the bottom is done. But if we break 1.68, then the markets will go anyway. Okay, let me get this off here then. And what else we see here? So we did discuss about this bearish flag and markets holding 1.78 here. Another thing interesting I will show you here. Let me add an indicator. I don't usually follow indicators, but just do basics. So this is RSI here. And now look at this interesting thing here. I'm going to show you. So take a trend here and look at this. And similarly, if I do this, this is a clear divergence and a change in trend. So this indicates that there is a change in trend, change in immediate trend. So at the moment the immediate trend is bearish. So based on this, I think we might see some bullish action here. So this is a change in trend, and if you want to know more about the change in trend, there is a special video recorded for change in trend on this channel. If you go to the mastering series, there is a separate video on trying to identify trying to analyze how to identify the change in trend. So for me, this looks like a change in trend with clear diversion here. So that is also an important point here to look at. But again, as I said, 1.78 is a key zone for me. We'll have to see how the markets open. Friday closing was really not bad. I didn't want the markets to close below 1.78. So at the moment, for the markets to get more bullish momentum, we would want them to close above 1.85 on an hourly, and then this will attract more bulls and the market's gonna go in the upper direction. If not, then I think bears is gonna try to break this 1.78. If they are successful, the next zone we are looking at 1.68. If they are successful breaking 1.68, I think then the market's probably evenly biased. It could move in either direction, the bearish or the bullish. Okay, let me get the RSI from the charts. Let's try and see what is the fib telling us, if at all. So let me get the fib, put it down at the swing low and swing high. Okay, so there you go. Look at how beautiful the fib is telling us. Let me put a horizontal row here at this level, and I'm going to mark it blue here. So look at that. Let me get this line out of the wind. Look at that, how 0.5 is supporting the price here. So which is, I've been telling in my past videos as well, like the fib is a very powerful tool. It actually gives you the accurate direction of the markets, or accurate levels or zones. So look at this zone, 1.75 as per the fib. It's 0.5. So arguably, for me at least, I think any trend which is holding above 0.5 is a correction, and the market should be looking to head still higher from here. So this is a bit of correction here, or a pullback, and then the market should move ahead. So that's the important level there. The next important level is 1.7, and we did mention that 1.68, 1.7 is a key zone. This is the PRZ, so this is the reversal zone. So if we break this, we are going to get supported on this. It will be quite a good support here, but let's see how the market behaves. But as long as the fib is telling, it's telling us that the pullback was still 0.5, and then the markets should head higher. Again, disclaimer, this is not a buy or sell recommendation. We are just studying the charts. We are just studying the price action based on the charts. So fib is also supporting an upward move here. Let me get it off. So, and the key level is, as I said, look at this key level, 0.5, 618. We might have a bit of, okay, that's too far level, a bit of resistance at this level, 2.1, but it's still far away. So that is basically on an hourly time frame. Nothing major here, but based on the fib and based on the price action, what we are seeing, and the divergence of the change in trend, the market looks like it wants to go up, but we'll see how it opens, and based on that, let's see what happens next week. Again, as I said, these are markets, anything and everything can happen, but based on the charts, we are seeing that this might be probably a reversal zone. That's what the conferences are telling us, but we have to see how the markets behave when they open on Monday. Let's go to 4 hours and see what they're telling us. 4 hours is also the same story, nothing much. Look at how 1.78 is supporting here. We did see a spike here, but then again it's just a bearish wick. The next candle we can see about 1.78, and you can see this this neckline when it's broken. It's so strong candles here, clearly says this necklines a breakdown of this descending triangle. So other than that, nothing much here on the 4 hours as well. It's the same story what we are looking at on the hourly. My preferred time frame is always hourly. 4 hours, saying that the bearish flag is still active here, to be honest. Look at that. So we need to be careful as well. 4 hours still telling us the bearish flag is active. So as long as we have as I said, hourly closing about 1.85 or 1.85, we will negate this bearish flag on the flow, on the 4 hour, and ready to move on the upside. So on the 4 hour, you have to be very careful here. Clearly, seeing the bearish flag from here. Okay, there you go. So based on the bearish flag, let us see what target we can get if we break down. Assuming we could break down from here, roughly around, okay, maybe roughly around 150, 160 pips. So if we break down from here, so 1.6-ish, roughly around that zone. But again, let's see if this flag materializes and breaks down, or we can negate this flag. To negate this flag, we need 1.85 above closing on hourly, or probably I usually look at hourly, so our closing about 1.85 should negate this flag. But we just have to keep in mind there is a bearish flag here on the 4 hour. Let's see what's happening on the daily. Daily is same story. Let me get rid of this flag from here. Okay, so daily, same story again. See that retest, channel broke out, these two green candles and two red candles, and then there you go. We are here at making a doji here. So let's see how it opens. Another thing which I notice here is a 3-touch rule. So usually the 3-touch rule says for any zone, support or resistance, any zone, when the price action touches there at the third time, it bounces from that level on a so basically what I'm trying to say, if this is the first touch, this is the second touch, and this is the third touch here, so after the third touch, the price should bounce back in a very very strong impulse move. So again, this might be a confluence for the prices to move in the upward direction. So if I just take, probably just to highlight the 3 touches here, so this is the first touch, sorry, not good with the mouse. First touch, second touch here, and the third touch here. So these are the 3 touches here. So as per the 3-touch rule, the third touch should actually bounce off in a very strong impulse move. So let's see. So we are getting confluences basically on the bullish side more than the bearish side. We can't ignore the bearish flag on the 4 hour, but let's see how the markets open. One observation here, I mean, if you look at this, I'm just gonna put this here. One observation here is 2 green candles, 2 red candles. Ignore this doji. 2 green candles, 2 red candles, 2 green, 2 red. We have just one here. So let's see. I mean, another just observation. I'm not saying that it's any conference or anything, but I'm just highlighting what I'm seeing. So maybe we can get another green candle here, but let's see how the market behaves on Monday. I think that's pretty much from my side on this. I mean, try to cover as much as what we can see on the charts. And as I said, 1.78 strong support, 1.68 strong support, $2 strong resistance at the moment. So, and then I think 1.95 is also strong resistance at the moment. So these 4 levels we need to watch out. But yeah, let's see how the market behaves in the week commencing of 11th of March. That's it from my side. Thank you for watching this. If you find this informative, please give us a thumbs up. Please share and subscribe to our channel. Thank you for your time, and I'll see you in the next one.